Good afternoon, everybody. It's absolute pleasure to have Sharif from 500 Startups, Sharif El-Badawi, joining us today on a subject that I think is very dear to a lot of people. We had a webinar series that we launched a couple of months ago, and we thought that given all the circumstances that we have at the moment, that it would be opportune to be able to try and show more content to all of you to get access to insights from industry leaders and stakeholders. And nothing is more important than what I believe to be the first subject. Sharif is a dear friend, investor, and extremely experienced in not just the current situation, but previous situations. And I thought it would be great to get his insights on this subject. And the subject today is Founder's Guide to Surviving the Current Chaos. And we're living in really uncharted waters at the moment and trying to understand how do we all navigate. It's all very fresh. There's several things that have taken place. And I would like to take the opportunity to speak to Sharif, learn from his insights, both as a founder and as currently a VC with 500, on his thoughts. And the structure of the webinar will be 20 minutes of Q&A between Sharif and I, and then I'll open it up. So if any of you have any questions, please put them into the Q&A box that's available. And we're currently running a poll. Love to get your insights and feedback so that we can then include it. So Sharif, thank you very much for joining us today. Do you want to just give a quick introduction on yourself and your role at 500, and then we'll jump straight into the questions?
Yeah, sure. It's a pleasure to be here. And my background is about 25 years as a technologist, as a startup entrepreneur, a tech company operator, and in the last 4 to 5 years as a VC. So I spent my first 12 years as an entrepreneur after college from the mid-90s until the late 2000s. So during that time, went through 2 economic crises that we felt very hard and very closely as a tech sector.
And so I guess, one of the questions is, we were going to say, we had a discussion, there've been several chaoses before. Without going into too much details, what are the parallels of some of them, and what were they that you can relate to previously?
Well, they were the dot-com boom and bust from 1999 to 2001 or so. And the second one I experienced was the 2008 recession. And mind you, in both cases, I was in California for them. Pretty deeply involved in the tech sector for both. Now, I think similarities are the denial or the phases of the masses' reaction to it, the news, mass news. And, initially it's denial, like we had here, that this is not a big deal, it's going to pass, you don't have to take any extreme measures. Then to somewhat of a panic. And when the markets actually start to react, the stock markets in particular start to react to the news, that's when more people start to think it's serious and start to panic. Then there's a phase of opportunism where you might have seen memes even going around here in MENA, where some of the startups probably are using poor taste and trying to be optimistic around COVID-19. But there's also a lot of time to sit and reflect as a startup or as an individual about taking tabs on what this means for you over the next 6 to 12 months, how you can be better prepared for it, and to face the music. If it's not your time, then you need to react quickly. And if it is your time, you also need to react quickly to survive. I think those are parallels that have existed across all of them.
So, really what sparked my interest here was that the Sequoia brought out this excellent article, which we're happy to share afterwards, on the so-called It's the Black Swan Year. And they were giving advice to their portfolio companies. And I thought it was very, very clear on some of the messaging that they had around that. And we've spoken as investor and startup, but I think it's opportune to kind of share to any of the startup founders on the call. What are, let's say, 5 key pieces of advice that us as founders should be aware of right now and take into consideration when we're trying to navigate the current crisis?
Right. I think as it pertains to startups in particular, there are a few things that we learned in the last couple recessions, and I think it's very applicable here. VCs are offering their advice all over the place, and I shared with you some of the resources I've been reading I think are helpful. But the main pieces of advice are, for a startup at least, is for founders to really take tabs on their business, their supply chains, their demand flows, how's it going to affect different lines of business. We've seen some great examples from our portfolio companies already sending us updates and really breaking down every aspect, every input to their business and every output over the near term and the longer term. And that assessment, I think, needs to be constantly visited every week and adjusted if needed, and then communicated again to all stakeholders being customers, employees, investors, shareholders, etc. And I think they need to be, in order to do that properly, they need to be on the phone with their suppliers, understand if anything is going to disrupt their supply chain, and what they're going to do to counter it. So it's hard to play this game of chess as a startup founder. I realize it was hard for us, but if you sit down in a room with your team and you really take each part of the business, either by department or by product line, and really like start with a whiteboard and say, what are the inputs? Are there any ramifications on these inputs that we may need to take a different direction in? There's going to be an assessment of what parts of your business or resources that you need to kill and what parts you need to keep. And I think that's a very sobering time for a startup, but it makes the difference between preparedness and the lack thereof.
Sharif, I might ask you if you can close the Slack. I think the notifications are popping up. One of the things that I think is, and we'll go back to, I think, some of the things that you're mentioning, but many people may have been fundraising and others may be considering fundraising. And clearly right now it's a bit of a challenging time. So we'll come on to the investors' mindset right now, but what's your advice to any startups that are currently fundraising or looking to fundraise? What's the mindset? Is it more survival and revenue growth, or do you continue to fundraise at this point?
I think in MENA it's still early to see the effect that VCs on the VC reaction. But from what we know ourselves and the VCs that we've spoken to in the region, it's business as usual with some extra considerations. But in Silicon Valley and in other parts of the world, there's a lot more talk on a slowdown. And I think there's a lot of warnings, sort of like the Sequoia letter from analysts in the industry saying that if you're an emerging fund manager or a minority fund manager, first-time fund manager, your timeline is going to be a lot longer than you expect to fundraise. If you have already fundraised or in the middle of the fundraise, you should also extend your timeline. If you've closed your fund and fundraised already and you're sitting on cash, it's the best time to be a VC because there are lots of deals to be had. Prices will be depressed, probably to what they should be at. And there are a lot of deals to be had. I mean, either in existing portfolios that you want to follow on to double down on, or new deals that you believe are, they're not even generating business today and they don't plan to launch the product for 6 to 9 months from now. So if you're a pre-seed, seed level investor, you might as well get in now anyway, because they're not going to be hit necessarily by revenue sliding or anything like that.
And if we flip it around to kind of like the entrepreneur, I mean, obviously you're looking to profit maximize or at least grow. So it's revenue and cost. Like revenue is one different thing where currently there's going to be challenges in many different ways. But costs, when you're looking at it as a founder and as a previous startup person and as a mentor to founders, what are some of the key things that you should be looking at when it comes to cost in managing your costs in the current environment?
Well, as I mentioned, I think, all of us have to take tabs on our own situation, and it's got to be a 360 sort of analysis. And, you have to be true to yourself and face the music. So if you want to keep your costs as low as possible, and if you need to make cuts, you need to do them quickly. Otherwise the effect of them is not as strong. And if you are planning to hire anybody, if they're not, if I think the overall rule is if it's not going to contribute to near-term revenue growth, then don't do it. So if you were planning to build out a team or start development on a new product or test something else, that if it's not core to revenue generation, and there's two parts of it. I think you want to maintain whatever costs you have to maintain your current revenue trajectory, but it's okay to increase your costs or spend more if it's going to generate additional revenue. And I think that's a tough one to follow because, again, you have to come back, sit at the table and figure out what things are you doing that you thought you needed as a company. Let's say a certain role, ancillary role or an operations role or something that just, of course, every company should have. But if it's not contributing to revenue, you don't need it today. You may go back to bringing that kind of person or function on again in 6 months when this blows over, but we don't know exactly when that's going to happen. And right now, you probably don't need it.
And so we did a little bit of a review of our costs, and I guess you need to also just be pragmatic. So you start looking at, are there subscriptions that you don't need? Are there any tech tools that you're not currently utilizing? Are there any office needs that you currently don't? We're also living in a very weird environment right now, right? So there's a lot of remote working and there's probably office costs that you're not utilizing. And yet I know that we struggled with, do you start putting those things on pause or not? And so like there is other things that you need to kind of identify as where can you optimize your cost structure. But one of the things is hiring. You did mention it. Again, you said if it's not adding to revenue generation, then it's likely to put on pause, is basically the simple rule. I mean, what about tech? Does one take the opportunity while things are a little bit quieter now to ensure that tech can continue to develop so that you're in a stronger position coming out of this potential situation?
Yeah, but so in a scenario where you are sitting on cash, this conversation is very different. So, and for the startups who have just closed a raise or happen to be cash flow positive and have money in the bank for, let's say, a 12-month runway, there is a whole situation, a scenario for that situation. And in that situation, which I have been in that situation, fortunately, in the 2008 recession, we had just raised a Series B, the entire Series B sitting in the bank account. We were profitable as a business, or at least cash flow positive as a business, growing like crazy. And Series C investors were pounding on the door saying, let us invest. And we said, we have the whole Series B sitting in the bank. Well, we don't need the money right now. But with a black swan event happening like this, we encourage entrepreneurs to raise as much as you can when you can, so that you have that cash. Now, if you're in that cash position, you do want to build, so long as the house isn't burning down in other areas, you would want to use this time to build. I think I've seen that happen in many cases where other companies will be failing, so there'll be talent for you to pick up. And their competition is also low during this time, so you don't need to fiercely fight competition, which is money burning. So those two things that go in your favor, if you can sit on cash and build out a team or build out a product that you'll come out of this and launch that product, then great. If you can do that, I think you're one of the lucky. But the majority don't have that luxury. They're either not cash flow positive as is, or don't have tons of cash sitting in the bank. And I think in those scenarios, you don't want to be building something new. If you have something revenue generating, you want to push the gas on it. And if you are not yet revenue positive, then you can continue to focus on what you think will get you to revenue the quickest.
Okay, and so as an investor, as 500, you're clearly also in discussions with LPs and governments and etc. We're not only in a COVID situation, you also have a current stock market situation, which is in a very fragile situation. Oil prices are down. It is still very new, but what's your views on how this may affect both the startup ecosystem and the wider economy? And I guess the golden question, which I know is very tough for you to answer, but for all of us to start thinking about, how long are we expecting this to kind of go on for? Or what are you hearing from government entities on this?
What I have heard, and I think is an effective measure or creative measures that governments can do to put ease on the business climate right now are things like expediting certain government services. If we're specifically, if we're talking about the UAE or GCC or Arab countries in the Middle East, certain processes are taking, have traditionally taken longer than they should. So if the government can step in and ease some of those processes, I think that will help. The other thing is to be able to reduce, delay, or eliminate fees, taxes, tariffs, any sort of costs that the government has the power to alleviate, which would help out SMEs and startups tremendously. So these are big costs for us, very little for them. And we're talking about an easement, right? So it's a 6 to 9 month maximum easement time frame. I don't think the market will recover in that time, but at least things will start to return to normal. Interesting things that the UAE government has announced already are easing lending hurdles and extending loan terms so that companies don't go into default or individuals don't go into default. I think that's tremendous. Providing stimulus packages and grants. You've heard the US and other countries already deploying capital to minimize the catastrophic effects that this can have on the economy and on people's lives. And I think that's important. And then finally, continuing to build out more fund of funds that can invest in VCs, that can invest in startups. So I don't hear the rhetoric happening in Silicon Valley here in MENA yet, which is, private equity and LPs are freezing up because they're too exposed, or they feel like continuing to fund the startup ecosystem is not the right time right now, or it's too risky. In fact, my recommendation, and I think my belief in general, is that what value proposition you believed in to get to this point we are in today as an ecosystem is now double the value. So if we were trying to convince governments to create fund of funds to fund startups so that we can build an economy from the ground up in the Middle East and to diversify sources of GDP, then now is actually even more of a reason we should continue to do that, because it is clear that when GDP is reliant on too few sources, it's not good for the economy, and the economy can hurt pretty badly. I think the audience and you and I can come up with two lists. One list of maybe 30, 40 sectors that will thrive in a market like this, an environment like this, and another 20 to 30 that will fail miserably during a market like this. And I think it's important for governments and for investors to realize what those are, so that they can be supportive of the ones that will thrive during this type of business, and then maybe offer some kind of support for the ones that need relief during these times.
And I guess a question about current staffing. When is it that you start taking measures of providing part-time work, 4-day work weeks, 3-day work weeks, extended holidays, early holidays? Are those discussions that you need to have? You mentioned immediately saying that if you need to remove talent, then take that immediately. But are there other ways of being able to mitigate some of the costs while we kind of wait out? Because in my opinion, right or wrong, there will be a new norm. If conferences are cancelled, you'll start seeing virtual conferences. If governments are currently told to go home, at some point they're going to have to start working on initiatives. So a new norm will emerge in the next couple of weeks. The question is, how do you weather out the time to get to that norm, for instance? Do you have any recommendations or tips around that?
So I think there's two parts to the question. One is, how do you cut your burn, and how do you cut costs to get through this? And inevitably that has to do with people and people's jobs. The other one is holidays, sick leave, things like that. Those are relief. But if you are planned to do non-paid holidays or sick leave, then we're back to the first topic, which is, are we cutting people's salaries? If you're cutting people's salaries or deferring people's salaries or just laying people off in general, I think we have to think about how that affects the economy as a whole, or the economy that at least you play in. So we don't, we want to care about our teams. We want to make sure that we can keep who keep and pay, those who we need to keep. But unfortunately, the sad reality is that if you need to cut your burn, you need to cut people that are not contributing to revenue now. And you need to do it as quickly as you can. And it's sad. It's a terrible thing. I think it's going to be in the hundreds of thousands and millions of people who are going to lose jobs. So we don't want to be rash.
And not just startups, across the board, right? It's not just startups, it's corporates and SMEs.
Yeah, probably less startups.
Yeah.
I mean, it depends on the type of sector they're in. But you can just think of travel tourism or restaurant waiters. You know, from all the businesses you see right now being closed down or told to freeze operations, right? On the one hand, all those employees are going to be affected, and I don't see business owners being that chivalrous and paying out salaries for all those people when their businesses are frozen. Although, you know, the larger companies may be able to sustain that for a little while, but the smaller companies, no way, right? So they're going to need some form of bailout or some kind of government assistance. Now, I think the government assistance should be focused on the individual. So if companies will fail, let them fail, you know, but you take care of individuals' healthcare, you take care of maybe housing, delayed payments, don't default them. You know, let's not let everyone go bankrupt and out in the street because of something like this. So I think number one priority from a government point of view is, and as a society, is take care of the people. But as a founder, CEO of your company, you have that side of it. And then you also have you have to face the reality is if I need to cut 50% of my staff to stay alive, I have to have a conversation with them and tell them I need to cut 50% of the staff. And if you do 10% per month for the next, 5-6 months, that is less likely to work than doing one huge cut now.
Okay. I think a final question, which is looping back to one of the things that you said earlier, but you're an investor. For any of the people that have investors on this call, you mentioned like sending an email, keeping them updated. I mean, what are the maybe 3 core things, and what's the frequency of what you would like to have? Because I mean, 500 has 120 or plus portfolio companies. You're going to read through all of these emails, and is it pitches? Is it long decks? Is it a quick email? I mean, what's the level of granularity and what's the level of frequency that you appreciate as an investor, as many other investors are probably likely to want to have, to be kept up to date? And is it more strategic actions or is it just numbers?
My preference, and many of the investors I know, prefer in-body updates, and in a normal circumstances it would be monthly. So you have an in-body update. If you have links in there to refer to additional information or a deck or something, great. But we just want a 30-second scan, and as concise as you can be while including numbers. I think it's very helpful. Now, in a crisis circumstance, I think weekly might be the right cadence. Of course, in the last 3 to 4 weeks, we've received dozens and dozens of updates from our portfolio companies. I think some are opportunistic and cavernous. They don't have much, substance to them. Others were extremely thoughtful. I think out of 180 companies in our portfolio in MENA, I think we got 4 or 5 that were extremely thoughtful. This is what will happen to this supply. And if it breaks, we have 3 other backups. And if that breaks, here's what we'll do. And here's how we'll cut costs one by one by one. And on the demand side, here's what they're going to do to create more demand without spending more money. Here's how their CAC to LTV ratios may get affected in scenario 1, 2, and 3. So it was a full 360 situational analysis for those companies. And I think that's exactly what we want to see. The ones who don't say anything or don't send any updates, just like in usual times, is a signal in itself. If you're not sending clear communication and updates to your investors, we're just going to assume things are not going well. And if things are not going well, the best thing you can do is communicate as early and often as you can, in a thoughtful way. It's not helpful to just wait till the last moment, send a WhatsApp message and say, things are hitting the fan. Can you jump in and help me immediately? It's very difficult, of course, for us to help in a scenario like that, but it also doesn't clearly show that you've thought through all the scenarios and how you're going to let us help you. So you need to help yourself so that we can help you.
If anyone has any questions, please send them through. We'll start going through some of the questions before the end. I mean, just to reiterate the point that I think it was at the 500 retreat that Walid Fazza of MSA Capital said, when we asked him advice for founders that may be struggling, he says, if something smells, he didn't quite say smell, but I'm going to change the word, now, then it's likely to smell in a couple of months. So it's better to tell people now upfront and be transparent about it rather than wait for it to get really bad and then bring that up. So I think full transparency with investors is definitely beneficial. We've received some questions already through the chat. So if anyone has any questions, do you have any advice for any travel tech startups on how to survive the current crisis, specifically in that space?
I think that's one of the most difficult ones, actually. I've been grappling with that with two of our startups, and one of them has, a digital guide, sort of travel guide product, right? So they're now going out with new messaging about, you can travel to these different cities virtually from your home. So initially it was a guide you take with you when you're in that city. So they sort of changed the message a little bit to see if this is something people can enjoy while they're in self-quarantine. Now, another one of ours is more on physical events and conferences and things like that. And now they are also retooling very, very, very rapidly. I'm talking within 24 hours of a phone call with us, retooled, remessaged, and are going out to offer more virtual conferencing tools. And I think they've already launched integrations with other companies who have different components to have a solution like that. And I think that's great. On the one hand, we talked about in the beginning, you need to cut your burn. You need to have a real assessment on whether you're going to make it or not. And if you're not going to make it, close down, return money to investors. If you are, or look for an acquisition target. I mean, right now is a great time to buy when prices are low. So if you think you're not going to make it, you need to start the Rolodex of like 20 to 50 potential acquirers and see if you have something you can offer them in team, market share, technology. And if you do think you're going to survive, you need to make sure you're watching your burn, reducing your risks, holding cash as much as you can, and growing your revenue. So all this under the umbrella of being cash flow positive is king. And even a travel business can stay cash flow positive because a lot of travel is revolving around marketing expenses. So if they can reduce marketing expenses and be cash flow positive, then they may be able to weather the storm.
I wanted to just make sure we can try and get through as many questions as possible. Nasser Ujuddin has a question, and I was going to ask you myself. Any tips for ensuring productivity for remote teams right now? We're all living in a brand new world of remote working. Many of us have probably never done this before. Do you have any tips for us as founders on ensuring productivity, culture, team morale in a remote environment?
Yeah, absolutely. I mean, we've been working remotely as distributed teams, although we have critical mass in Bahrain, Saudi, UAE. Our staff has been remote since we started. So to us, and I think many of you may have some of that built in already. You're already using these tools. You're already working from different places than the rest of your team. Even 500 overall is a pretty global team, and we managed to work very remotely. But we use a variety of tools. I don't think anything that's mind-blowing, but Google Suite, Zoom, Slack, and that's about it. I mean, with all of that, we've had our written communication, our audio and video communication, and our collaboration tool for all the docs that we use. So that makes it pretty easy, I think, with just that. I've seen circulated, there's been a few lists of 40, 50, 60 tools for remote working. One of our fellow founders in the Falcons Fund, Conrad, he put together a short list, I think, of 7 tips for productive working from home. I'm happy to share that with you. I find challenging now because for a lot of those who have children and their spouses are also home with you, that's sort of a different scenario than prior to this crisis, right? So I may have been working from home all along, but my children were in school, or everybody had something to do to keep themselves busy. But that's my biggest fear. I think biggest challenge right now is this is 7 days a week, every day, from morning to night. And I would recommend, and I haven't really solved this for myself, but I think this is going to be the clincher, is separate the time that you're looking at financial news and Corona news from the rest of your day. Because to me, that is the thing driving me up the wall the most, is that I can't stop looking at the news for those two subjects. And as much as we need to monitor the market, I don't think it's healthy to be just constantly reading news and social media. So one thing I put into practice a while back is to segment your day. So you have your free time and you have your work time, your social time with your family, or and eating and things like that. But you need to separate them just like you would normally without a crisis. You just have to be on when you're on and off when you're off. I think that's an old challenge I used to have, which is just working 24 hours a day all the time and never knowing when I'm off or on.
I've got a question here. I'm going to read it as is, but it's an interesting one. But it's one for you. Mohammed Mash'al asks, as an investor who signed an agreement to invest in tranches with startups, is it wise to postpone the payments until the situation would be clearer? Or what is the proper actions for VCs now in terms of new investments versus existing ones?
Yeah, we have a philosophy on that. As 500 Falcons, Hassan and I, and I think there's a variety out there. In Silicon Valley, we've heard people pull their term sheets back. I'm not sure specifically about what they've done with their tranches, but our philosophy is that if you've committed to an investment, even if it's been 6 months and the deal's not done yet, and maybe the business isn't as attractive as it was 6 months ago, if we gave you that commitment, we're still going to invest. That's just our thing. So I don't know if every investor follows that, but if we made a commitment, we made the commitment. If there are tranches, which we have a few that, not by choice on our part, but if we have deals that have tranches, we're going to honor those tranches because, the startup is really relying on those things and built them into their numbers. So I don't really have a good reason why I would pull the tranche back. Just because I'm not as bullish on the business anymore, I don't think that's fair. That's my personal take.
That's fair enough. Interesting question. I'm not sure how you answer it, but it's basically, you mentioned it's a good time for M&A. It's very hard to apply that as a advice without knowing the business. But if you are looking for opportunities, what are the type of opportunities? Can you give any criteria or kind of advice on what it is that you should be looking for in terms of potential acquisitions?
Well, I think, there's going to be good deals to be had, right? So a lot of companies are going to struggle. That doesn't mean they are bad. That doesn't mean they're bad teams. It doesn't mean it was a bad product or idea. They could have great traction as well. They just didn't manage cash flow. And that's why we always say cash flow is important to manage, or at least to have a line of sight to cash flow. So if a black swan event like this happens, you can get there, right? Most founders ignore that because, that's when times are bad. Well, times will never be bad. But so far it's like clockwork every 10 years. So it always happens. And I think, if you are in a strong position and there are very good deals to be had, why not take advantage of that now? And I think there has to be synergies between the organizations to make it a win-win situation. Obviously for the acquired company, it wasn't their dream, trajectory to be acquired at a lower rate, but it is a soft landing, and the ecosystem should take care of each other. So from an investor's point of view, look, it doesn't necessarily create returns for us if one of our portfolio companies that's struggling gets soft landing at another portfolio company or even an outside company. If the price is even, okay, well, it's just like a zombie investment for us. It's still alive. Let's see if there's going to have growth from that point. So in some cases, better than dying, but it's not necessarily a windfall for investors. It's just a way to maintain and to stop the downside.
Perfect. Thank you very much, Sharif. There's a final one which I'm going to answer, but love your advice as somebody who says, given that there's lots of events and functions and demo days which are closing down, how would you recommend founders can scout for investors an alternative? Obviously, we're here to try and support. There's 70 plus different investors on the platform that you can connect with using your platform. You can actually go on the people page and filter by angels or VCs to connect with them directly on the platform. But I guess there's a bit in brackets here, since online isn't always appreciated. Are we going to be living in a new norm now whereby if we can't be attending events, then you do need to create a mechanism by which investors, if they are looking to invest, will be open to more online engagement than offline engagement?
Look, I think most of us are halfway there anyway. I know our team is, we do a lot of calls and video and emails and chats before we make an investment. There are investments that we've made where we haven't met the founder in person until our retreat. It's because we have an ongoing rubric and a style of investing that is very high frequency. So based on a couple conversations, reviewing the docs, doing legal DD, which none of that is needed in person. So we're fine. I understand that there are many investors, and maybe rightly so, will not make an investment without an in-person meeting with the founder. I think some of that has to do with the insights you gain from face-to-face. I don't think that is much different than a Zoom call, in my opinion. But so I think people will have to adjust. I don't think founders should be shy to approach investors. If anything, investors should have more time on their hands because they're sitting in one place. They're not traveling less, which, by the way, traveling takes up an enormous amount of our time. Traveling, conferences, and meetings, and coffees, and it's just, if we eliminate that, which we now have, we should have actually a lot more time. I'm much more attentive to my emails now than I was before. Did I say that live? But we're in between funds, so so I think in general, venture capital has a typical 3-year deployment period. So know the vintages of the funds you're going after. So if a fund just closed and is in the beginning of their 3-year period, they have to deploy capital. If they're halfway through, they need to deploy. If they're at the end, then they really need to deploy, right? So if my investment period ends in December, I can't really afford to wait till October to continue to deploy. Like say, let me wait this out. And why wait it out when your pre-revenue companies are as cheap as they can possibly be now because of the situation, and the ones that you were going to invest in anyway are still going to have the effect you were expecting when this is over? Or if they are investments that you want to double down on, now is the time to give them that runway so they don't die, because you already are in that deal. So this is an exercise for us. We've already completed first checks from our first fund, but we are now very much focused on follow-on, even forecasting ahead of time who's going to need money that didn't ask us yet, and trying to park dry powder on the side for them. And I think all VCs are probably going through this exercise in some way.
Thank you very much, Sharif. I mean, a couple of things just to wrap up. We'll be publishing this video online on the webinar page and as an individual page. We encourage you to share that if you found this useful to anybody else that was unable to attend. I'll be sharing a bunch of links that Sharif has provided as resources that may be helpful for you as founders and the wider ecosystem. I guess there's a call to all of the investors that were on this call. Let us know if you are in that 3-year vintage period and looking to deploy, so that we can map that out and let people be informed of who to connect with. I reiterate the point that there's 70 plus different funding institutions who Noor, our community manager, has just reached out to asking, are you still currently investing? And we wrote an article around this, asking them what they're currently doing. So you can find out if they're currently investing, and it's very simple to do that. It's an introduction on the platform. Let them get back to you and continue the conversation through Skype or through messaging on MAGNiTT itself. And as a platform, we created a COVID page, which we're trying to aggregate and update on a daily basis. Like Sharif says, it can get very easy to get drowned in all of the news that's taking place. What we're trying to do is just summarize what are the key news articles that are relevant to us as founders. It's not meant to be all articles. It's how does it affect your business? How does it affect your employees? How does it affect your travel? Any notifications that come from the region on that, we're updating. And if you have ideas or suggestions or thoughts that you would like to share with us for upcoming webinars, there is no lack of demand from key stakeholders wanting to share and impart wisdom with us in this time on a webinar, but we want to make sure that the content is valid and relevant for yourselves. So do let us know and we'll try and get them on here. We've upped the frequency to 1 a week, but we're happy to do more if we believe that the content is relevant. So do let us know and we'll send a summary email with all of these points afterwards. But I would like to finally thank Sharif for all of that wisdom that you've given us, and we will be happy to share that with everybody afterwards.
Thanks, Philip.
Thank you very much. Take care.